Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
Hi and welcome to StockInvest.us podcast for week 50 and the third last podcast before 2022. Over the last few weeks I told you it would be a volatile ride, and what a volatile ride it was last week, where Nasdaq was up 3% on Tuesday. As I told you, the start was to be good with very low amount of sell signals, everything indicating that it could be a strong start of the week. Personally, I was expecting that the last part of the week, the Thursday and the Friday, to be red, but only Thursday went red. All in all, super good week where Nasdaq went up more than 3%. And last week's trading tip, DocuSign. Well, how did it go? You will know the details shortly, but it was a very good trade, I can promise you that. We managed to bank in some good greens, but the analysis for Microsoft, Apple and Tesla fell a bit short, especially Apple, which ended the week at $179, just pushing upwards. But the week, as I said, was a bit stronger than I expected. So what will it be this week? Well, I will let you know very shortly, as we will head into the first part of this podcast, which is the markets. Then we will follow up with some analysis, some trading tips, and at the very end look at the portfolio. So why let's wait? Just let's start with the markets as usual. It became a very strong week for the markets last week, where Nasdaq went up 3.61%, ending the week at 15,630 points. And Dow Jones did very well as well, up more than 1,121 points, ending the week just below 36,000 points, or 3.22% gain for the week as such. And it was especially the Tuesday that was very well, where Nasdaq was up more than 3%. As I told you last week, you could expect a very good start for the week. I wasn't sure about the end of the week. I expected it to become more red, but it was only Thursday that was red. Friday ended green as well. And for weeks and weeks, I've been telling you to expect volatile markets with huge movements. It's the trader's dream. It's where we make the real good money. Some of the reason why I was so positive for the opening last week was the very low amount of buy signals at Nasdaq. It was only 9% buy signals, and I haven't seen that low number of buy signals for Nasdaq since I started giving this podcast. And usually that is a super duper buying opportunity, because most likely things would go up, but it could also go very fast, very bad. But it became a very, very good week. How is it with the signals this week? How much buy signals is at Nasdaq? We'll get to that very shortly. But first, we'll just look at the news of the week, because there are some things that you should keep in mind that will come up, so it doesn't come as a surprise. And there are some key indicators that we follow, some prices that we follow. And what are the news for the week? Well, on Thursday, the job numbers will come. We know sometimes these job numbers come in much lower or higher than expected, and that takes an effect on the market. I'm not sure there will be any surprises on Thursday. And I think that there has to be more than just bad job numbers to bring the general positive market down. So if you have a bad start of the week, bad numbers on Thursday could contribute to more reds, but personally I don't think that will happen. I think the job numbers for once will come in more or less as expected. More important is the Feds. The Feds will signal how they will deal with the monetary politics moving forward, and that is a much more interesting thing. What will they do with the inflation? As we know, inflation came in at 6.8% over the last 12 months and hasn't been this high for 39 years. How will they deal with it? Will they start increase interest rates? These are things that will be signaled during the week. What we also know is that there has been an insane amount of money pushed into the markets, if I'm not mistaken. There has 40% of all money printing happening in the United States happened during the last 12 months. And as I said in the previous podcast, this money has a tendency to flow into the market. That might also be the reason why we see some of these major stocks doing so good. But inflation is here to stay. The question is, how will they deal with it? And I think that a lot of investors will follow Fed. And just a little bit more about inflation, things that you should know about inflation is 6.8% does not necessarily reflect the real thing, because inflation is measured across a very, very wide range of products, is an index. How this inflation affects people is very different if you live in the city, if you live more on the countryside. For instance, if you live on the countryside, you are more dependent on using your car. You are more dependent on fuel prices, and we know the fuel prices went up much more than 6.8%. And right now, oatmeal is going crazy. Coffee is up by more than 100%, if I'm not mistaken. So for what we call the ordinary Joe, there is no doubt that the inflation is taking a toll on the budget. So there will be less investments done by private persons into the market as we move forward. And these things will also be a little bit news about consumer spendings. How much do we actually spend? Where is the money flowing right now? So some fundamental news for the week, but really nothing majorly as I see it. Some rumors are out in the markets that Israel is talking with the US, trying to get authorized to do a strike into nuclear power plants in Iran. Will this be? Is it just a scaring tactic over for Iran and the development of uranium? What is the uranium? What is the purpose of this? But we know that sometimes things are flagged high. I don't think that anything will happen this week, but it's a new thing coming up. Is there a possible strike, preventive strike on Iran going on? Knowing that the current government in the United States seems to be a little bit pro-Iranian, I don't think it's very likely. But it's one of these things that pop up, and you have to understand that an external event can really make a huge impact on the market. So far, I've been betting on the Ukraine-Russian conflict, that Russia will invade Ukraine, or at least escalate, and that could be the one thing that triggers markets moving deeper into reds. So far, it's just been a lot of talks. The last news is that they will try to invade somewhere after New Year. But right now, as it is, it's not as much tension as it was just a few weeks ago. But you would like to keep an overview over the major things. COVID been very, very much into the news. If you follow some of the European countries now, the COVID situation is getting out of control again. Super high spreads, and they are talking about shutting down countries like Norway and different other countries. Will it be? Will be hard to see, but I'm not sure that for this week these things will affect the market. But it could be an upcoming thing if we have to shut down major countries, especially if we have to shut down US, Germany, and these big economics. If this happen, that should infect inflate the markets badly. Anyway, gold was up by $7 last week at 1,787. Oil up $4, ending at $72. The 10-year Treasury yield, which we like to follow, was up 0.15, ending at 1.49. As is. Really nothing special other than these things moving up. For the past few weeks before that, they were moving slightly down, but last week they went up together with the markets. And then it's a question, how is our signals doing? Right now it's 18% buy signals across all the stocks that we analyze all over the world. It is up from 14 last week. Nasdaq 12% buy signals, New York Stock Exchange 22% buy signals, and London 19% buy signals. All in all, as the buy signals go up, you should expect less volatility. So right now there is nothing indicating that we will have these very, very huge swings. I don't think that we will see a 3% day this week. If there will be a 3% week, it has to be some very, very negative news. I don't see the upside for a 3% day during the week. Hopefully I'm wrong, but as these numbers go up to what I would say is more normal, you should also see the volatility get less. Frankfurt, 19% buy signal, been 19 for 3 weeks in a row. Tokyo slightly up to 15, and Shenzhen in China is 36, same as last week. The signals indicate to me a fair chance that we will move a little bit upwards, but we have to look at the charts to see. And one thing I mentioned last week is that bounce up from the bottom of the trend is the most common reaction. That was why the bet was for markets moving up in the beginning of the week. Question is, what will happen when it hits the middle of the trend? Because usually if things is about to change, that's where it will start to go down again. When it started hitting the resistance from the moving averages, and last week I told you there were several sell crosses issued. Are they still valid, or is it broken up? Is things getting better again? And we will just quickly look at the chart for Nasdaq, and let's see what it tells before we conclude about the market. And looking at the chart, you can do this yourself. Go to StockInvest.us, type in the ticker Exig, and you will see, or write Nasdaq in the search field. And right now, you can see that Nasdaq bounced up from the bottom of the trend, as you could expect it, all the way up to 15,800, and then fell on the Thursday, a little bit up on the Friday. This is classic pattern, just as you can expect. I think I mentioned the very huge resistance at 15,800 to be too much for the markets. Sell signal is still there from the relation between the short and the long moving averages, but currently there is a buy signal from the short-term moving average and a sell signal from the long-term moving average. Volume did not rise as it should on the upturn last week, and it's actually very low now. You can think about this in two ways. As I told you, I like to see volume following the price. That's much better. When it's the opposite, you have a divergence. And how do you analyze this? How do you interpret what has happened? Well, the markets move much up, but you have to understand that there were not many sellers last week. Most stock had been falling very hard in the few weeks before. So these huge steps where things move up 5-10% just in a single day is very, very common when things are very low, or what we like to refer to as oversold. And I mentioned to you, relative strength index has been very low, etc. The low volume give, however, possibility to add more volume to the market, because we know when the volume is topping, usually the market tops as well. So coming from a low volume position in this case could be a good sign. It's for sure not very, very negative as I see it. It's not that classical sell-off pattern. So we will see. Relative strength index 43 is nothing special. The markets are still low, indicating that there is a potential for the upside. The problem is, of course, that huge resistance between 15,800 and 16,000 points could be broken in a single day if the markets are very good. But at the same time, it's a huge chance that the markets will bounce down. If the sell cross is, as usual, sell cross are for a longer period than just a week, usually they last somewhere between 7 to 12 weeks, meaning that we should expect more red in total. If this will be the case, then we can expect the following, that the market might go sideways or slide up for the beginning of the week and then fall by the end of the week. If that will be the case, it will find good support just below where it is today at 15,600, 15,500. If that is broken down, it should fall to 15,200, where it finds really good support and should probably bounce up. Given that the buy signals are going slight up, given the very good support, there is a reason to believe that the most likely movement this week will be between 15,200 and 15,800 points. And at the end of the week, most likely will be somewhere around where it is today, 15,600, 15,500 points, meaning that it should not be a very, very special week. The volatility, the huge volatility, will most likely not be there. You can have a single day with 1 or 2%, but I don't see why there should be a 3% move any day unless there is some very scary news coming out pushing the market hard down. So that will be the bet, my bet for this week, that we might see a push upwards to 15,800. I think that will be too hard, and that it will push downwards. Could be, of course, intraday, that things starts very good, that you get that very nice start, things up by 1.5%, pushing close to 16,000, but we are talking end of day prices, so that it doesn't go above 15,800 by the end of the day. I am not sure if it will go as low as 15,200. It's very hard to say. Usually this part of the year, the last few weeks, tend to be quite okay trading weeks statistically. So we will just have to see. But the final evaluation for the markets before we quickly run through some major stocks, before heading to this week's trading tips. Well, my guess is that the Nasdaq will close somewhere around 15,450 points by the end of the week, meaning that it should, week over week, be slightly down. That will be the conclusion, and let's see if some of the major stocks say the same. I will start this section saying that I, again, was off targets, been off targets for a few weeks now. Feels a little strange being this off targets. I seem to be too negative, because if you look at Apple last week, I told you I thought Apple would go down to around 155, but Apple went up to 100 and almost 80, 179.45. Also, Apple had that amazing Tuesday pushing very hard. But looking at Microsoft, I thought Microsoft would end at 310, ending at 342, also way up. The only of these three stocks that we follow, Apple, Microsoft, Tesla. Tesla was the one getting closer. Tesla been falling down since hitting 1,200, ending the week at 1,017 points, heading towards my 880 target, but very far off last week. If you look at the Apple chart, we can see that things again is pointing upwards. It was especially breaking that 165 that changed things to the very much better. And the good thing for the Apple investor is, of course, when the reaction down comes, because now it will come again. There is support at 175. There is very, very good support at 165 to $160. So the risk seems actually less. The stock's been overbought on the relative strength index for weeks and weeks, as high as 80, now floating around 75. But it just keeps pushing up. Money are going straight into the Apple stock. They are for sure not going out. Volume went okay with the stock for the first part of this month. But last week it didn't really follow the price. But no one was selling, so the price was just going up. And how will it be this week? Well, floating on very high relative strength index, it can just continue to push upward, and it can push upwards to 200. I told you these things before. When things are like they are, they can just continue very hard. That is why you would like to ride with trailing stop loss, where the stock only follows the stock upwards, never downwards. So if to be sold, it goes out. That very, very natural reaction down, which I expected last week, did not happen as Nasdaq pushed as hard as it did. And now there will for sure be a reaction down. But most likely it won't be the big one. With that very, very strong support at 175, you can see this for yourself if you go into our webpage. Type in the ticker Apple or write Apple in the search field. You can see the charts as right now the stock is in the top of the trend. Usually it will react down. Good support at 175 may very well be the point where it just stops and then continues upwards. If 175 is broken, there is very little support before 165. And right now that is what I see, that possibility of a total natural reaction downwards to $165. That $155 target doesn't seem very realistic as is, with the strong support above, and knowing that there is slightly building up with more buy signals across all the charts. So what to say for this week? Well, I've been wrong 3 weeks in a row, and usually for those who follow me know that I'm very often almost on the dollar, but lately so off. I should try to be more optimistic, but again, I will keep a lower target for Apple, but I will have to increase it. And I will say by the end of the week, I guess that Apple will stand somewhere between $165 and $167. So let's say $166 will be the end price for Apple by the end of the week. And this, again, just as I said in the last few podcasts, this will just be what I consider to be a total natural reaction short term. As is, it is not following typical trading patterns, pushing hard, but it seems like that's where investors want to be, is Apple pushing it up, and it can, as I just said, easily go to 200 during the week. There is no reason why it shouldn't, other than it's now is floating on very high relative strength index. It is what we consider to be overbought, and in most cases this causes a reaction down or sideways reaction. And we'll not dwell more with that. Just let's get straight to Microsoft. And looking at Microsoft, we can see the same thing. It bounced up from the bottom of the trend last week, had a short sell signals from moving averages. Now it's turning into a buy signal. Volume followed the stock very nicely last week. Little to no resistance above where it is today. Coming from a very low relative strength index position indicates that there actually is an upturn in Microsoft. Most likely it should continue to push upwards, maybe as high as 370. If there will be a reaction downwards, it should most likely stop around the support at $340 to $330. Between these two levels is heavy support levels. So anywhere between there, it most likely will just stop, then continue upwards. And for the week as such, knowing that the volume on Friday was at the upper part of what usually is high volume for Microsoft. The most likely development this week is little slow start, probably then push higher. I would say it's a fair chance that Microsoft will end higher by the end of the week than it ended last week. So I will change my target a little bit and actually say that I think there is a fair chance that Microsoft will end the week at $345. And that's a huge change from my previous views, where I've been saying that I think Microsoft will be somewhere around $312 and $320. But as I say, with good support below, when stocks go above previous resistance, these things just become support levels. What should worry a little bit, as I said, was the high volume on Friday. Should indicate that it should be a slow start, but I think that there is the support between 330, 340 will pick the stock up and just continue to push it upwards. There are some slight signs that we could head into a head and shoulder formation, a very bad one, but still. But for that to happen, the stock has to go down during the week. If it pushes up, it will break it and just continue within that very, very nice rising trend. And what about Tesla? As you know, I did the Tesla ride myself from 560 all the way up to 1200, and it was cut by a trailing stop loss. I was out just below 1200 after a super gain, and as I said, I will not get in until it gets down to around 800, because I think, in my opinion, it should get down to that level. Last week, Tesla did not perform like the other stocks, has a sell signals from the relation between the long and the short-term moving average, what we call a sell cross, not a star, but a sell cross. Sell signal both from the short and the long-term moving average indicate that most likely the stock should continue to push downwards. Very, very little support below 1000, so if you get that red start of the week where you have a little negative things, even pushing Tesla below 1000, things could get more rapidly. And for sure, it's a huge, huge chance that we will see a fall to 900 during this week. At the same time, balancing at 1000 could also be the place where it just booms up to 1100, giving a double bottom, indicating that it should move up to 1150. These things are so hard to say. The volume is following the stock to some degree. We like that. So I would say that it's almost on the edge. Will it be up or will it be down? Relative strength index is falling. It's not oversold. It's 37, so it can still fall more. I will just have to make a guess. And I will actually stick to the same. I believe Tesla will go down to 880. So 880 will be my tip for this week. For all you following Tesla, loving Tesla, and enjoying the Tesla ride, hopefully I will be wrong. But the chart indicates that it should for sure struggle. And as I said, with little support from 1000 to 900, it is a likely reaction. And overall, if we look very long, this is just what I consider total natural reaction. There is nothing scary about it. You can go to a web page, look at the chart, look at the 12-month chart. You can select 3, 12 or Bollinger chart, and you will see for yourself that it's more or less total reaction down after it was way overbought, heading to $1,229. The reaction we see now is what considers to be so. Looking at the gray bars on the right-hand side, which reflects accumulated volume, you can see for yourself there is nothing between 900 and 1000, meaning there was hardly anyone buying between 900 and 1000 because the stock jumped too fast up between these two levels. So there is really no one sitting waiting to sell their shares between $1,000 and $900. So if it breaks below 9,000, just expect it to fall very fast. Support also from the long-term moving average around 880. We will see if I will be correct or not. And before we head into crypto, I'll just give you this small advice as well, because at our webpage StockInvest we have so many tools and we are not able to communicate how good many of them are. If you go check the chart, as I said, just above the chart you can see 3 months charts, 12-month charts, and there is something called Bollinger. And Bollinger is very, very nice. And if you, for instance, go to the Tesla chart, you can see that there was a squeeze in the Bollinger early on a few months ago. And as the stock break up, gave a buy signal, the price went totally crazy. Right now, it is again going into a neck, what do you call a Bollinger neck formation, to a squeeze. And if it breaks down, you should expect a huge fall. But there is so many candies to be found using Bollinger Bond. So have a look for yourself. Go to the web page, check the chart, look for 3, 12 months charts, and you have also something called Bollinger. And right now you will see that the Bollinger band is having a sell signals. You will see green and red lines in the chart indicating whether it's buy or sell. The price itself is represented by candlesticks, which also is a very nice tool if you start to learn different candle signals. We'll not dwell more about that. We will hit straight to the Bitcoin, and as you know, I've been positive to the crypto, but been also, I would say, off for the crypto. I said to you just when Bitcoin was 30, just get in because it will just push upwards. This last, let's say how much now, 4 weeks downturn have taken me by total surprise. I was expecting it for sure to bounce up somewhere around 50,000 and just continue upwards. The problem with Bitcoin now is huge resistance between 55 and 65,000. So everything indicates that it will move slowly. And there is really nothing in the chart saying that there will be any fancy stuff during this week. I hope I will be wrong, but it has to be, in my opinion, some monetary things causing money to move straight into Bitcoin. But at the same time, Bitcoin is just pushing up from the bottom of the trend, which is another natural reaction. And in the long term, everything still looks very good for Bitcoin. And we know that most other things follow Bitcoin. Relative strength index is oversold in the long term. That might be a good signal. It's a little bit early. At the same time, there is a sell cross from the moving averages. So I'm really not sure exactly how this heads from being very optimistic when everything was above 55,000 because 55 was support. I have to admit that I'm starting to see a more sideways pattern with the option of a forthcoming fall. However, for this week, I don't see any reason why it should fall further. It should most likely bounce up, but heavy resistance at 55,000 makes it very hard to believe that it will get any higher than 55 during the week. So we'll try to be a little realistic, and for this week say that by the end of the week, I think Bitcoin will be around $53,000. These things change fast, but for really good gains, it has to go above 65,000. But again, as I said in the very beginning of this podcast, Fed is going to signal different stuff this week. Keep an eye on it because that can affect crypto very negatively for sure. Or, on the other hand, it could also help the crypto to continue upwards. And we follow Dogecoin, and last bet on Dogecoin, we put that 20 cents, saying that that was an obvious buying opportunity, but it went as low as 16 cents. So that trade is right now not in the green. And for the last 3 weeks, it's been totally oversold for Dogecoin, but there hasn't been any real action in the crypto market. That just reflects on Dogecoin. I said it should react up because from being very oversold, things should react up. But it hasn't. And the thing is, and then we'll just repeat something I said many times before, when things are oversold, they can get very worse much faster. It's the same thing when things are overbought, things can just go even faster up. So being as low as is, it can suddenly just fall harder. And right now, it is in the very, very bottom of the trend. Normally, you should expect it to go up to the middle of the trend, will be somewhere around 24 cents. Doesn't look like it will happen in a week, but that it should pick up and slightly move upwards. But for sure, that 20-cent trade is not as positive as it was when we put it, because resistance 20 cents, 22 cents, 24, 26, 28 cents, later 30 cents. And my bet that this will go quickly to 40 is not likely to happen. As is, there has to be something moving it. Either Elon starts to tweet again about Dogecoin, or it has to get some attention to really push it. Right now, it looks to me like the most likely scenario for the week as such is ending just somewhere around 20 cents. So I will actually keep that as a target, 20 cents, and we will see if we can get back on track with these analyses and again be spot on and not as far off as we have been over the last, I think, 3, maybe 4 weeks, been off on all targets. See if we can get back on track. And that brings me to the very last end of this portfolio, where we will look at the trading tips. And last week I said we will play hardball in DocuSign, because DocuSign had a huge fall in the week before, and I saw that as a trading opportunity. How did it really go? Did we make money? We will know, because now it is the trading tips and the portfolio, and that will be the end of the podcast. And then we are at the very last part of the podcast, where we look at trading tips and the high-risk portfolio, which we've been following since Christmas. And how did the trading tips go? Well, as you know, last week we had to shut down Excel and Zoom with loss. Excel 5.85% loss and Zoom with 3.57% loss. We kept Exigam open and put a new bet in Doku, and as I said, maybe DocuSign will get us back, because before the last 2 weeks we were in on very nice gains. We had AMC 22% gain, Moderna 8.45% gain, Nvidia 13% gain, so the weekly trades were doing very good. Then we came into the red weeks in 45, 46, 47, and we're not able to track. And Exigam, which I said with the open position, not with trailing stop loss, really brought things down. But I told you that would be a very speculative trade, so it's still open. And let's start with the Exigam. I still keep it open. It ended Friday at 5:35. It was above 6 at some point, starting to get some traction, but then there were Friday. And Exigam is this kind of stock that needs a certain market to really move. Has to be the attention, of course, for biotech companies. I have done many successful trades. For those who follow knows that we put Exigam in the high-risk portfolio. We bought it at 872. We saw it fell down. First it went up to 13, I think. Then it fell down in just a few days to 4 or 5. And went totally crazy up again. And it was sold out of the portfolio at $17 with 96% profit. I'm trying to replicate this, Exigam being as volatile as it is. I think there still is a chance to make money on Exigam, but it's for sure much less, as we are down 43% on this single trade. All these gains from previous periods, of course, makes us still in the green. But this Exigam, we need to flip this Exigam, so we'll just follow it and see how it will be. If you check out the chart, you can do this for yourself. It's always a good thing to do. when we bought Ukuggen, it was a fair chance that it should buy up, but it just went into oversold and it's totally oversold on the relative strength index. Didn't move up when it was 9 at oversold, didn't move up when it was 14 at oversold. Now it is 22 on oversold, so it is usually most stocks statistically move up when they are oversold, for sure. Some, not always that much, and that was the thing that I was hunting. It sells signals from the short-term moving average, long-term moving average, and it's below the support at 7, so the journey upward should be a little bit harder, but this is the level where you usually see things move more rapidly as being oversold as long as it has. But it is for sure not the best I've seen, but I will be very surprised if it doesn't move up this week. How high? Very hard to say, but enough to start close some of the losses. And then there is DocuSign. We set DocuSign last week. I told you I was hoping to get in at 135, 136 on Monday's trade. But I was actually able to get in at 133.45. Was super happy about that, was below my target, and then it started to move during day. Tuesday was not very super, but on Thursday it went all the way up to 163.77. I was running trailing stop loss, so when the stock fell, it was out after 3.5% at 158.85, giving 19% profits. So Doku is out. I said it would be a short trade, giving 19% pure profit, and how happy we are about that. And just a little bit about this accumulation. As you know, we started in week 37. I started to give these trading tips. We did Nvidia, Roku. Nvidia gave 30% profit, Roku gave 5% profit. So the profit was put into the next trade. The next two trades were Coin and Singa, giving 2.32%. Then the next two trades after that was Diffusion AMC. Diffusion was just in and out, didn't make anything there, but AMC was 22%. So we just continued doubling up on profit. Week 40 we did SQ and Moderna, and had to take a trading stop loss on SQ with a loss of 3.77, and Moderna gave us 8.45%. So money just kept accumulating, and that's the thing, how we build up the capital. And again, the amount of good trades is up. So 19% on Duke again was very nice after we had to sell Excel and Zoom last week with 5.85% loss and 3.57% loss. And if this is your first podcast listening to me, I will just do a quick tip. Reduce your losses, increase your gains. I say this over and over again. That is why I usually run trailing stop losses, so it will be sold. It's not my decision because selling is so hard. It's just out. And that is how we keep the losses lower. My losses is usually 3.5 or 5.8%. Because the trailing stop loss, I set it based on volatility, is usually between 3.5 and 6%. Usually I find what I think is the most likely, because I don't want my stock to be cut by a sudden move if I am positive to the stock. And for gainers, I just let them run with a trailing stop loss upwards. So I always will have the highest price minus the stop loss. And that makes the gains very good, and the stop losses, the losses less, because that's what you want, exactly what you want. Good gains, less losses. So what about this week? You wonder, well, what can I do? As I told you, I have Ukuggen open, so that's the only one in this trading tips portfolio which is open, and that means that I still think there is money to make in Ukuggen. So at 5.35, it's even better. When I went in at 9.4 for sure. Doesn't guarantee anything. As I said, it's a very highly volatility stock, but I think that they should be able to get up. And these prices even more so. We will see if I'm right or wrong. But for quick trade, my trade was not successful. 535, again, still a good tips. For this week, I was checking a few stocks, and I'm not sure if we will continue the rebounds in the markets coming from very, very low sell signals. Will it just push upwards? Because that might very well happen. And then it was Lucid and BABA. Checking these two stocks. I am not sure if I will buy both of them or just one of them. I haven't decided, and I will still need a little bit more time than this podcast to decide. But I'm looking at Lucid, hoping to get in somewhere around 37.60, and BABA at 125. Most likely I will end up buying both of them, hoping that I can do some bottom fishing. High risk, these stocks have been falling much. There is no reason why they shouldn't continue to fall. I will just try to bet on the statistics that they will pick up. I will hunt for these anywhere from 3 to, I would say 3 to 15% should be possible gain in these stocks. There are many other interesting stocks, of course, but for a trade, a very short trade in and out, I think that there might be some room in Lucid, BABA. Be prepared. Volatile, meaning that you should see some hefty movement. So it might just be that we will have to take a loss. I really don't know. But these are the trading tips. So you can see with Exigam, Lucid, and BABA, we are talking high risk. Remember, things are happening in China now. They have problems with debt, etc. So don't be surprised if the trade doesn't go that good. If I was giving a too safe advice, 1%, you will need a lot of capital to make even a good gain. And this is just trading for fun. In, out, we will see what we'll do. And then it's the high risk portfolio. And for those who've been following know that I haven't bought any new shares into the high risk because I said the markets are getting a little bit scary in my opinion. I have reduced my total exposure in the markets. They can go to zero, doesn't matter to me. I will be totally profit for the year as such because I've taken my profit out. I've kept reducing my exposures in the market because I expect things to go worse. I get some questions. Why don't you invest then in sell options, etc.? It's simply I don't have time to put all my attention to trading. We are building up Exigam, more than 200,000 registered users. We have to follow them up. And all these new, nice, good, strong, solid products coming out, which I recommend you to use. 95% of everything at our webpage is free. It's for you. All we want is for you. Increase your gains, reduce your losses. And we will keep that philosophy. We are here to try help you do a better trade. Check out our YouTube channel. Even this podcast will be on YouTube a little bit later today. You will find videos. We will keep making them even better. We add more fundamental data. They are there for free. It's for you. And our idea is just to help you with information, help you with things that will make your decision making easier. And the high risk portfolio, we haven't added anyone. That's a new one. As I say, I want to start close this portfolio. So what are we left with? We're left with Diffusion Pharmaceutical. Was such a good trade, been accumulated several times in Diffusion Pharmaceuticals. And actually that trade is very positive all overall with all the buying and selling on high and low. But following the price, when I started to show, because I was trading Diffusion Pharmaceuticals all from 40 cents. But when this podcast started, I just set all the prices which were then. We are struggling, and there is nothing really showing that Diffusion should push anytime soon fast. They have some products, tests and trials coming up, some news, but their management really, sorry to say, sucks. They are not able to push good news when there is momentum in the market. They seem to be, I've never seen such bad timing on news, because usually you should utilize the market when markets are good, when there is a high attention to, for instance, biotech companies, when you will try to push some news, helping your stock price up to push the relevant news, how your trades are doing. For some reason, they managed to push good news, what I consider to be good news, in red markets, so they don't get any effect. Hardly keep the stock floating on a very red day. On a green day, it could push much higher, so they have to start doing something with how they deal with media and publications. And some news has to be published, of course, on a given day, has to do with insiding and all these things. But in general, they are not good on their publications. Maybe because they have money in the bank and don't care really about publications right now, but they will for sure when they run out of money. Still think it's money to be made in the fusion pharmaceuticals, but maybe not this week. We will see what happens. I think there will be a biotech rush before Christmas. Will I be right? Not no. NEO, 34.26 last week, up some 7% from the week before. Should just continue this week. But at this point, I was expecting NEO far higher. And NEO might struggle a little bit if I'm right about Tesla. Pushing downwards, the attention to electric cars might not be as is. And with high electricity prices across the world, you should also see some attention on the electric cars. But again, we know that the governments across the world are pushing money into green tech, the new Green Deal. So there should still be a lot of money, incentives, etc., flowing into that business. Geoservice trading 338 last week, Norwegian kroner. It's a Norwegian geoservice company. Did very well. And was really heading upwards, but are now stuck. They have a lot of debt. It's again high risk trade. Surprised me that they fell all the way to 338, but there were a lot of negative push from different analysts in Norway a few weeks ago when the stock were around 5, I think, and then pushing it down upwards. But I see a huge upside in Geoservice as oil. Again, is hot topic. We know Biden is begging OPEC to produce more and other countries. And then it's about discovering new fields. And it might be, in general, that we, from being public, very negative view opinions about oil, I might think that we will see some realism soon where oil again will play the natural role it will have for many, many years to come. Good oil prices was up, as I said, $4 last week. I think it will just continue upwards, and that should help Geoservice. So these are the stocks left. I'm not sure it will be anything spectacular this week for any of them. Should most likely, in my opinion, just be smaller fluctuations. I think that the general will be up. Hopefully, we will have a sudden run like happened in Autos. As you remember, Autos was closed last week with 94% profit. It came eventually, that very nice run, which we'll be waiting for. That is the end of the portfolio. As I said, it's the third last podcast before Christmas. There's only 2 of them left. I will try my very best, as I've been done now since week 13, almost 2 years ago, to give it to you before the markets open next Monday. And hopefully I will be very right in some of the things I said, that we will be back on track, being spot on the dollars. Anyway, have a very, very nice week and hopefully do some good trades. And we will speak in just a week.